Diversification is one of the most effective strategies for managing investment risk. So mutual funds provide an excellent way to diversify across different market segments, ensuring a mix of stability and growth. One such category that blends both aspects seamlessly is large and mid-cap mutual funds. So these funds invest in both large cap and mid-cap companies, offering a combination of steady performance and high growth potential. But how do they work and why should they be a part of your portfolio? Let's dive into the video. So hi, welcome to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. As per SEBI's classification, mutual funds categorize companies based on market capitalization. If it's a large cap company, the top 100 companies by market capitalization. So these companies offer stability and consistent performance. So if you look at mid cap companies, they are ranked from 101 to 250. So these companies have higher growth potential but come with more volatility. So large and mid cap mutual funds are required to allocate at least 35% of their portfolio to large cap stocks and another 35% to mid cap stocks. This balanced allocation mitigates risk while capitalizing on high growth opportunities. So what are the key benefits from these funds? First, stability from large cap stocks. So large cap stocks acts as an anchor during volatile market conditions. Why? Because these companies have strong financials, well-established business models, consistent track records. So this means your portfolio remains relatively stable even when the markets fluctuate. Number 2, growth potential from the mid-cap stocks. While mid-cap stocks come with higher volatility, they also offer greater opportunities for rapid growth. When the market is bullish, mid-cap stocks can significantly boost your returns. Wouldn't you want a portfolio that can capitalize on market upswings? Number 3, risk mitigation through diversification. Investing in both large and mid-sized companies provides a natural hedge against extreme market volatility. If mid-cap stocks face a downturn, the large cap portion ensures stability. If mid-cap stocks rally, they drive higher overall returns. So it is a win-win strategy for investors looking for both security and growth. Number 4, sectoral exposure and market adaptability. Another major advantage of large and mid-cap funds is their broad exposure to multiple sectors. So fund managers strategically allocate assets across industries like technology, healthcare, finance, manufacturing. So this multi-sector exposure helps investors benefit from different economic cycles and minimizes risk. Wouldn't you prefer an investment that can adapt to changing market conditions? And large and mid-cap funds are ideal for investors looking for a balanced mix of stability and growth, or those with a moderate to high risk appetite. And if you're a long-term investor, you need to have a time horizon of at least minimum 5 to 7 years who can withstand market fluctuations. And if you're an individual who wants diversified exposure to large and mid-sized companies within a single investment, or if you're someone who's looking for a fund that can capitalize on both market stability and growth opportunities, large and mid-cap funds are ideal for you. But one important thing to remember is not all large and mid-cap funds are created equal. So selecting the right one requires a careful evaluation of key factors like past performance. So compare funds based on their 3-year and 5-year returns to assess consistency, and also their expense ratio. Lower expense ratios mean higher net returns for investors. And also take a careful evaluation of the fund manager's track record. A skilled fund manager can make strategic decisions to enhance your returns. And portfolio composition is also an important thing to consider. You can ensure a balanced allocation between large cap and mid cap stocks. And another thing to consider is risk adjusted returns. So check Sharpe ratio and standard deviation to measure risk versus reward. And finally, check the investment strategy. So you need to understand whether the fund follows an aggressive or conservative approach based on your risk appetite. So would you rather make an informed choice or take unnecessary risk with your money? So while large and mid-cap funds offer diversified benefits, they are still market-linked investments. As an investor, you should consider first of all volatility. So mid-cap stocks experience higher price fluctuations than large-cap stocks. And number 2, market timing risk. Performance varies depending on the market conditions. conditions. And number 3, investment horizon. These funds are best suited for long-term investors, minimum 5 to 7 years. And number 4, economic slowdown. So mid-cap stocks are more sensitive to downturns than large cap stocks. So knowing these risks can help you stay prepared and invest with confidence. And another important thing is how much of your portfolio should be allocated to large and mid-cap funds. So on the screen, we have presented a tabular column where we have suggested an allocation strategy based on the investor type. So you can definitely look at it for reference. So if you're a conservative investor, you need to have at least 20 to 30% allocation of large and mid-cap funds in your portfolio, and other investments could be large cap funds or fixed income. And if you're a moderate investor type, then you need to have 40 to 50% of large and mid-cap fund allocation, and your other investments could include hybrid funds and debt funds. And if you're a type of investor who's aggressive, then you need to have 50 to 70% of your large and mid-cap fund allocation in your portfolio. And your other investments could include small cap and sectoral funds. Your allocation should reflect your financial goals and risk appetite. So where do you see yourself in this table? Comment below. Now, looking at all the factors that you need to review and analyze and assess the large and mid-cap funds, you can understand that investing in mutual funds require careful analysis, and a certified financial planner can help you with that. So how they can help you is, first they will understand your risk profile and align your investments with your financial goals, and they will select the right large and mid-cap fund based on your needs, and they will also help you to optimize your portfolio for tax efficiency and better returns, and they will ensure periodic rebalancing to maintain the ideal asset allocation. So a CFP acts as your financial guide, ensuring that your investments align with your inspirations. So why go at it alone when you can have expert guidance? Now, with India's economy expanding rapidly, large and mid-cap funds are emerging as a preferred choice for investors seeking high returns with controlled risk. So what are the market trends right now supporting large and mid-cap investments? First, rising economic growth. So the Indian economy is set for continued expansion, benefiting both large and mid-cap companies. Secondly, increased institutional participation. So domestic and foreign institutional investors are investing more in mid-cap stocks, improving their liquidity and valuation. And thirdly, sectoral shift. So growth in technology, infrastructure and manufacturing is boosting mid-cap stocks, while large caps provide stability in uncertain times. And finally, the historical performance. So large and mid-cap funds have outperformed pure large cap funds over long time frames, so delivering superior risk-adjusted return. Given these factors, investing in large and mid-cap funds could be a strategic move for those aiming for a balanced and resilient portfolio. Wouldn't you want to benefit from a growing market? So what is the final takeaway from this video? Large and mid-cap funds offer the best of both worlds, so the stability of large cap stocks and the growth potential of mid-cap stocks. They provide diversification, risk mitigation and adaptability to different market conditions. But before investing, it's crucial to assess your risk tolerance and consult with a financial expert like a CFP. Investing wisely today can pave the way for a financially secure future. So click the link in the description if you need professional guidance to book a free consultation with one of our certified financial planner today, because making informed choices today leads to wealth and stability tomorrow. And if you find this video interesting, give it a like, share and subscribe to our YouTube channel. And I will see you in the next video with much more smart financial tips. So thank you for watching.
Check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.